Good morning, everybody. Happy Wednesday. Happy Wednesday. Hope everyone's doing well. We are going to just give this another minute or two at most, and then we're going to get started. So thank you all for being here. And thank you for the confirmation of audio and visual as always. Much appreciated. I'm just checking a couple of news wires here on some stuff that's just crossing the tape. Yeah. Okay. Perfect. Okay, cool. Okay, so let's get started again. Good morning, everybody, and happy Wednesday. What we want to talk about here today is a little commodity heavy. Some initial thoughts sort of towards 2026, and we're going to do our state of the market probably before the year's over, and then, or at least a smaller state of the market before the year's over, and then, of course, as we head into 2026 in January, we'll do a larger one. But I do want to just quickly show people what we're seeing here, that we think is just the beginning of a bigger move into the commodity space. Before that, just quick reminder, if you're here for the first time, welcome. This is our Set the Market morning call. It's great to have you guys all here. Please make sure you give us a thumbs up like on all the videos you watch, including this one. And if you could subscribe to the channel, that would be awesome. It's free, obviously, so we look forward to seeing you do that. We're going to cover a few things this morning. We're going to look at commodities quickly. The first thing I want to do is I want to let you know of some of the data we have. In fact, the S&P just took a decisive move to the negative. Well, I mean, intraday, which is this here right now. So you can see that little move just now. So it was data related. We have a lot more data today. We have the ISM data hitting her at 10 o'clock Eastern, so that's in about an hour. And so that's something we want to watch very closely. So a couple things. First of all, let's quickly talk about this whole move in commodities. I showed everyone of our clients a chart. I'm going to see if I can find it here. I'm going to have to click around here for just a minute. I believe it was this chart here. Here. Okay. So I'm going to quickly create a chart that is going to look like this. So this is, I think, a pretty interesting chart for everyone to kind of be aware of. So I'm just going to quickly create it, and then I'll tell you what it is, or maybe more specifically, we'll go with gold itself. So this is a pretty important chart that I'm creating, and I think this is something to keep in mind as we finish off the rest of 2025 here and head into 2026. And we'll look at this one here. Okay, so what you have here is a situation where the price of gold and the precious metals had a notable breakout, as you guys probably know, quite some time ago, right? So this is nothing new. So that's basically, the gold breakout really happened all the way back in 2024. If you look at commodities more broadly, and I should probably make these weekly charts, to be quite honest with you, because I think that's going to give you a better view. There you go, that's better. What we've not seen yet is any sort of breakout price action by commodities as an asset class, right? So we've seen, and this is something that I want to be very, very, very much on top of. In fact, I just, and I'm talking about 20 minutes ago, had the pleasure of a pretty meaningful fund manager walking into my office. He manages a lot of money for some really, really wealthy people. And we actually talked about this, and it reminded me that I wanted to show you guys this. I want to show you guys this in about a week or two, but might as well talk about it here today quickly. So this is the price of gold, and you can see a major breakout, of course, that started taking place. In fact, that breakout goes back even further if we really kind of look at it, right? So you can kind of squint a little bit and you can see that breakout. Now, the breakout in commodity as an asset class hasn't happened, right? So if that happens, which would be like a commodity super cycle, then we would see a hell of a move in commodities. And this is an asset allocation question, right? So where this comes, where this rubber really meets the road is when we take this within the context of understanding where the S&P 500 is trading, right, at the very, very upper end, in fact, now above the upper end of a 100-year trend. And if that begins to stall, not today or tomorrow, but at some point in 2026, and commodities get a boost, then this is probably where I want to allocate a lot of money to. Now, to be very clear with you, and this is, again, not advice, this is educational. If you have a trader's mindset and you're largely trading your account, but not investing it, this is going to be a nearly impossible thing to allocate to from a trading perspective. These are asset allocations. So I always try to explain to people, I don't know one person that in gold is up, 120%, which they should have been if they had traded the breakout in gold, if they invested in the breakout in gold. I know a lot of people that made a couple of good trades, they're up 20, 30%, but nowhere near the move. It's because they have a trader's mindset. The traders don't make nearly as much money as investors, right? I'm all for trading. You guys know that I do it. I do a lot of it, but the investing part is where I really look to generate wealth, right? And so if you imagine trying to trade this breakout in commodities, if it happens, I think there's a good chance it happens, then I would really warn people from looking at it as a trade. It's an asset allocation shift in portfolios. That's really what we see here. So I just want to show you this. Hopefully this is helpful. Some feedback would be awesome. Anyone that has any thoughts, views on this would be awesome. I'm also going to, if you are a Trade Ops member, I'm going to also post this into the Trade Ops chat room here shortly, so you guys can have that as a reference point in the research part of Trade Ops. This is our members area. Okay. Good. I'm just looking at, I see, okay, just some headlines here. We had a weaker ADP jobs report. That's why the market's down. Okay, so that's just a bit of a view on commodities. And again, this is a bigger picture thing to understand, to at least be aware of, I should say. The next thing I want to talk about a little bit more, and this is going to catch a bunch of people that are a bit more short-term oriented, catch their attention, and that's Bitcoin. Now, Bitcoin is interesting because we talked about Bitcoin as something that may have been a leading indicator to the NASDAQ 100. And I was very careful in that because I wouldn't want to be short the NASDAQ in any meaningful size, especially since it went right back up. But I'm still not sure we're out of the woods yet from a correlation perspective. So Bitcoin, of course, had that big move lower. That's the orange line. And the NASDAQ 100, of course, never really moved much. In the meantime, and this is the more shorter term, so if this is our multi-month view, right? So on a multi-month basis, it's still possible ultimately the NASDAQ follows Bitcoin lower. I haven't stopped that possibility, but that's a multi-month view. In the near term, and we're talking about weeks probably at most for now. What you're looking at here is we had a momentum sell signal in the price of Bitcoin in October. In fact, it happened on a Sunday, on the 12th of October. And that, of course, since that sell signal, Bitcoin at the absolute trough was down almost 30%. It's now still down about 20%, right? So that momentum shift, that's the near-term stuff. That momentum shift was pretty important. By my view of knowing the algorithm, our momentum indicator, it's called the TST Trend Momentum Indicator. If you have it, you know what it is. Knowing the algo, I would not be surprised if Bitcoin has another decent couple of up days. If we get a momentum buy signal, I would not be surprised if that were to happen. So that's something that I'm watching very closely right now in the price of Bitcoin, okay? So, and again, any questions, please let us know. So that takes care of commodities, Bitcoin. I do want to quickly talk about some other things. One of those being natural gas. Now we can look at natural gas futures. One can look at the UNG ETF as well. But I want to just quickly show you where this is trading and how it looks like. So natural gas is volatile, by the way. So please keep that in mind. It's obviously never a recommendation, just information. But the way natural gas is acting here is quite healthy. In fact, it may be very healthy. So, you can look at something like the UNG ETF if that's something that you're into, more than futures, which of course I understand. There's a lot of price action here that's quite constructive. So UNG is another thing I can put on your radar. And then last but not least, I'll quickly add copper on your radar, which I know a lot of you know that we have a very bullish theme on copper. In fact, actually, before we go to copper, let me quickly remind you, because I do want to quickly just take a step back here as well. I want to remind you of our educational session this week. We this week are focusing on teaching people how we can take advantage of extremely overbought and oversold situations in the market. For example, the S&P 500 right now, the futures contract, is getting very, 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 very oversold in the short term. It's not yet it's not yet a buy signal, but it's flashing as careful. It's getting very oversold in the intraday here over the next maybe 30, 60 minutes. We can use that same approach on the daily charts and even weekly charts. So that's something to keep in mind. But if you don't know about how to find extremely overbought or extremely overbought parts of the market, what you can do is you can join us this week in our educational session. The next session is going to take place tomorrow, Thursday. That's December 4th at 1 p.m. Eastern, so that's 10 a.m. Pacific time. So if you guys want to learn more about that, make sure you click on the link. It's in Christian put it into the chat box, so you guys should be able to join us there. So we look forward to having you guys in our session tomorrow on that. So that's that, and that gets us to the last thing, which is copper. Again, this is something that we have talked about now for some time, and copper this morning is up 2.6%. So you guys know the price of copper. You really have to look at the price of copper through a multi-quarter lens, so because otherwise it gets a bit choppy. But this here is, I think, an interesting chart. In fact, we could even look at this on a monthly basis, so you can kind of see what this looks like, and we can get rid of the noise a little bit. But the price of copper, I think, is at a point where I personally think this could be a huge asset allocation opportunity here through a multi-quarter, probably a multi-year lens. So the price of copper here, this is the long-term multi-year chart. You can see this, the consolidation phase alone goes back all the way to 2006, right? But if this breaks out, then I think we're going to have a hell of a move, and this could easily double, right? So that's some of the things we look at. So hopefully this has been helpful, folks. Again, please hit that thumbs up like button. Please smash that thumbs up like button. And if you could subscribe to the channel, even better. That's free. What that does for you is it allows you to be updated in real time when we go live. So that's the benefit on that. With that, we'll end it on this. We'll be back here tomorrow morning, Thursday, for Ticker Thursday. So make sure you bring your tickers. All of you guys that are Set the Market members, we'll see you over there in a few minutes. I'm going to post you this chart here so you have it over there as well. And we'll, again, see the rest of you back here tomorrow morning. Take care. Trade 'em well.